I don't know.
That's fraction market.
Actually, I've got my.
I can't do that. Into Michigan.
Well, I did get this, but it says
Yeah,
create an
so
account
create, yeah,
and sign in.
account.
But let me see. If we
That's fine.
I'm gonna check my email. I'm not sure. Okay, thank you.
Invalid password in the email.
Have you signed up?
I got
The email would be from Michigan.
No, it will be from either client service or info master markets from them.
Risha basically.
No, I won't say my name on it.
I'm just gonna search master market.
Yeah, it will definitely be there. We call them weekly group coaching sessions.
I know.
We should have a question for you. It's a very serious question. It's very important. What's the internet marketing that this guy is teaching?
Oh, he's going to teach you like techniques for how you can make money on the internet. Yeah, that's right.
So it's not advertising anymore.
Okay. Let's start. So basically today, because you guys are actually all of you. I don't even know what the regulars are today. The way that these weekly group coaching sessions work is that normally what we do is we pick out a topic from the manual.
Mm-hmm.
We go over it in real market conditions. It's okay, and then we go over that topic, and then we look at it in real market conditions. As opposed to just learning it theoretically, we actually look at it in the market and actually look at okay, so for example, today we're talking about trends. So we'll actually go into the market and we'll actually look at how we define trends. As on real graphs, as opposed to just in the manual.
Yeah. Or the manual from the seminar.
Yeah.
Oh, yeah.
And then what we do is we go on to cover a strategy. And today we need to go over the dynamic breakout a little bit. But as you guys are all coming to the first time, maybe we'll do lift off / dynamic breakout. Let's see. Are you comfortable with lift off? Remember it? Read that.
Yeah, we will.
Okay, and then just do like a Q&A, and we'll finish about 9. That'd be too much later than that. Yeah. 7 through till 8:30. We'll finish for about an hour. 15. Yeah. Okay. So okay, we'll kick off. So let's grab. Okay, so in here we're going to talk about trends, right? So we're just taking a little piece of the manual out every single week, right? And we're just going over a small section. So this week's topic is trends. Basically, we've got enough trends. Last week, Tiru covered fundamental analysis, and he covered direct market access and spread betting, and went over those in detail. So he did those two. So I'm going to cover these ones here. There. Okay. So I'm going to cover these two. Now, when we go back to the manual, the definition of the trends we have, there's a diagram in there. It looks a little bit like this. And we've labeled these points here, and we say that an uptrend is basically higher highs and higher lows. Everyone remember this from the course?
Mm-hmm.
Yeah. So higher highs and higher lows, and we talk about that as an uptrend. And then we talk about lower lows and lower highs. Yeah, so that's that. So we look at it in this perspective here. So what we're going to do this week, basically, maybe over the next 15, 20 minutes, so it's just go into a little bit of detail about this, yeah, because the definition that we teach at Trades Basecamp is good, but it's just like a beginner definition. So now what we do is just kind of build on that a little bit, yeah. So first of all, before we do that, it's really important trends and the way that their market is trending. So do you want to know why? Exactly.
Why it's trending?
Why it's important to look at trends.
Because you should follow the trend?
Yeah, exactly. So ideally, if the market is trending upwards, then we want to do what kind of positions primarily? Yeah, buy. You remember this?
Yeah.
Yeah, a little bit. And then downtrend primarily, what type of positions would we want to take on? Yeah, sure, to sell, right? So because the market is falling, primarily we would like to go in the direction of the market. That's the idea there. So this is the very base level definition that we do give. So now what we do is we just go into like a little bit of detail. Now, with trends in particular, there's really important definition that we need to use that's more accurate than this. So let me show you what that looks like. So for an uptrend to be established, what we need are actually everything up to this point just here. We need a higher high. This will be a high here. And this is a
Is that a daily time frame?
it could be anything. That's the beauty of this,
So
right?
it changes when you change the time frame.
Yes, it does, but the cycles will still all be very similar to each other. We'll look at a couple of charts in just a moment. Those. So we've got a high point here. We've got another high point. It's higher than the previous one, so we call it a high high. And then you've got, and this is a higher low. Okay. So the reason that I've drawn it like this is because, let's say for example you're looking right at the beginning of the chart. Okay. There's nothing before this at all, right? This is the first part that you're looking at. So you've got a high point and you've got a low point. There's no reference to anything previously. This point is called a higher high. The only reason it's called a higher high is because it's higher than this. Does that make sense?
Mm-hmm.
Yeah. And this point is called a higher low because it's
No.
right. So now imagine something like this were to happen. Like this. This would be. Does anyone know what this would be called now?
Lower. Low?
Yeah. Why?
Because it's lower than the previous
That's it. So everything is just in reference to each other. That's my point. Yeah? Okay. Now, the reason we need to know this is because when we go back into our dynamic breakout in a little while, these types of trends are really important just to have an understanding of. But the definition here of an uptrend is basically we want to see two of these higher lows and one higher high. And that would be enough of a definition for us to have an uptrend.
But again, that doesn't guarantee that it will be an uptrend because it can decrease rate suddenly. Something
It
can
can,
happen.
yeah. It can, and if it does that, then we can take advantage of that as well. And that's what our dynamic breakout strategy does. It can suddenly decrease, and we can take advantage of that, right? So here, for an uptrend, we need 2 times higher lows and 1 time higher high. That's the minimum amount of points we need for an uptrend to be defined. So basically, on this chart, from this point onwards here, we have an upward trend. Okay, that's that there. So now, okay, so that's an upward trend. This is going to feed quite nicely into what we're going to talk about next, because we can take advantage of upward trends by trading long on the breaks of these. We call them swing highs. Yeah, so these are our swing highs just here. We can take advantage of those by trading the market along the break just here. Here we can also take advantage of swing lows as well. So if the market does suddenly decline and it falls like this, we can enter a short position here. take advantage of that.
So let's say we've entered on the first high long.
Yeah.
Then we exit immediately and then enter again short. How does it work?
Yeah, it's a good question. So it depends, like how far this goes. It depends if we will get out this strategy. Maybe we'll get out at a profit. Maybe we'll get out at a loss. Depends how high it goes. But regardless, if it comes back down here and it goes down like this, we can tell. Either we'll just probably take a new position because we can't be long and short at the same time.
You different stop.
Yeah. So I mean, let me give you an example of what this looks like now on an uptrend. So, right, let me show you how this will look. So supposing that you have a trend that's setting itself up like this. Okay, so now this is a higher high, right? What we'll do is we'll have an entry point here. So if the market goes higher and it goes past this point just here, this will trigger us into the trade. Right? We'll place an entry order to go long here. Make sense?
Mm-hmm.
Based on where the last swing high was, we'll go long here.
And this is just a technical question. So this is done automatically. So you say to
Automatically, yeah.
To the system, okay, this is where I want to enter. Okay.
Exactly. It's done automatically. Okay, now, so to answer your question, if the price goes against you here as well, supposing two things can happen, right? Either you get into this trade long, okay, or you don't, or let's just say the market just falls here, you never get into this one, and the market goes like this, you can still enter a short trade here, just here, yeah? And there are actually some examples of this right now on the live trading room. I'll show you. So this sets up here like what we call a lower high. So there are basically two ways, and these are two of the variations of the dynamic breakout. But my point really here is that whatever the market, whichever way the market moves, whichever way it trends, we can take it. There's one way we can take advantage of it, right? Because it's obviously uncertain as to exactly what's going to happen next. If you have an upward trend, you'd expect it to carry on going up. It doesn't necessarily do that. If it doesn't, we can take it. We take a trade short, and we take advantage of it that way. If it carries on going up, we take a trade long, take advantage of it that way. Yeah.
So if in the example that you showed, it actually hit our entry point.
Yeah.
So that means that we bought long.
That's it. So if it hits our entry point just there, we buy long. Right. From this point, either one of two things can happen now. Either it will carry on going up, and it will hit a target, in which case we'll bank and make a profit, or it will come against us here, and most likely, if it comes against us, it will hit a stop loss just here, and it will take us out of the trade automatically at a loss. Yeah. If it does that, and it carries on going down, we can enter another trade. Yeah. Does that make sense? Is that pretty straightforward?
But that's assuming you're watching the market. Because if you go to work and you set it up.
Yeah, the question is like daily charts there. Mm-hmm. So these are daily charts. So these are all daily charts. So the idea is that you can just set the trade up, and during the day it's going to do whatever, and then you can check it in the evening and trade stop losses or whatever. Does that make sense? Yeah.
Well, even your indicators and your technical analysis says it's going to go long.
Yeah.
You're not going to hedge and bet both ways.
You can. I mean, that's the idea. That's what we will do that anyway. Naturally, with this strategy, dynamic breakout, we'll do it both ways. We'll place one order long, one order short.
So that you could end up with huge losses then, because if you trigger it when it goes up,
yeah,
and there was just a bit of volatility and it went down, it triggers you on the downward, so it enters the sell.
Yeah.
Then all of a sudden it goes up again. Mm-hmm. And it's probably going to trigger your stop on it. So you've lost both ways.
Yeah. Okay. So, that can happen.
Yeah.
Yeah, that can happen. And rarely it does happen. Yeah. So you can also have sort of one that triggers long, and then it doesn't work out. Then it kind of goes the other way, and and it goes short, and then it will also go away, and then obviously the market is just sideways in that time, then that will give us a signal that we need to stay out. Yeah, I mean, yeah, but you can't have huge losses without only 1%.
But in this particular with the 2%, because you said 1%
Yeah, that's
going
right,
up,
yeah.
1% going down.
Yeah. But it's not really huge, it's managed, right? It's small compared to the upside. Yeah. And then we'll get another trade that maybe will go long again and it will hit its target and you'll make that 2% back. Yeah. Same thing in the downtrend. So in the downtrend, here we're looking for lower lows and lower highs. Here, the definition of a downtrend, this is a low, this is a high. The definition of a downtrend is that 2 lower highs and 1 lower low just here. So this will define our downtrend for us. If we have that, then again we can look for opportunities to trade short and long. Even if the market comes up on this side.
So but what's our confirmation? What's telling us to?
These previous swing highs and swing lows. So these previous swing highs and swing lows act as support and resistance, and we're trading the break of these.
And what indicators would confirm that? Because I think the market, I mean, incredibly volatile. It goes up and down.
Very true.
If we're just looking at up and down, I mean, we'll probably be entering in and out of the market.
Yeah, very true. This strategy on the daily only sets up, I would say, probably we only get around about 30 to 40 trades a year, and of that, it will yield around about, I think it's a 10.5% return over that period of time, over that 1 year. So we'll do on average 1% a month across 5 currencies. So trading enough, just trading the breaks of these swing highs and swing lows is enough of a confirmation based on that. We don't need, the indicators are all, indicators you would bear in mind just derive from the price itself. Yeah. They just derive from the price. So they're just lagging indicators for us. They're lagging signals, they don't provide real-time information. So we're trading with the dynamic, with just the dynamic breakout strategy as an example. It's just.
So it's only on the price action.
Just purely price action, yeah. That's it. And that's proven to work over a period of time. Yeah. It will be a lot easier for me. I can show you some real life examples.
Hello, how are you?
Good, yourself?
Yeah, very well.
How are you doing?
Yeah, good. What time you start?
Well, it was supposed to start at 7, but it didn't. It started I think 15 minutes early.
Okay, that's fine.
Because
I didn't
some
miss.
people were late.
I was here then.
I didn't miss too much time.
No, you didn't. Is that like repetitive? Have you heard this? Have you seen this?
What?
It's lesson before.
Yeah, every week.
Oh, okay.
Every Tuesday.
Huh?
Every
You
Tuesday.
should. No, but the lesson, the content of the lesson.
No.
I'm right home.
Change it.
Yeah, not today. Just. Yes, yeah. I was going to call you later. Okay. I'll call you from the train because I'll probably be on the train in my way home. Yeah.
but almost.
One,
2 and 1.
High, 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 high.
two higher
High.
highs and one high. Oh no.
See,
High.
yeah,
Two higher lows,
Higher
one
lows,
higher
higher
high.
that's right. Yeah, that's right. So you need to have 2 higher lows
Yeah.
and 1 higher high, right? For an uptrend. That's the key thing. So now, if we're looking at this, and this happened here, so what kind of trend would this be now?
Left trend.
What do we all think? An uptrend.
Yeah.
Yeah. Okay. Would you agree, Susan? Okay. So then, and then if we had maybe something that happened that looks like this. This is lower high. What would this be now?
That's a downtrend.
What does everyone else think?
I think we're not sure because we need to see another lower high.
Yeah, okay. Mostly you're right. Mostly you're right because you need to see one more lower high. Yes, yeah, you actually see one more lower low. But what it is if you're coming from an uptrend like this, and it breaks a higher low like this, it just comes straight down and it breaks a higher low like that. Actually, the second that happens, it's instantly like a downtrend, right? So it breaks just there, it's instantly a downtrend. And even on this very bar, it breaks this level here, yeah? So that's the only exception that we have, or we can normally, because normally when we look for a downtrend, we say we need more high, or low, right? Normally we say that we need that, but the only exception to that rule is if it breaks
Yes.
from an uptrend like that, right? And this is actually what we call a dynamic breakout. It's a variation 1 dynamic breakout. We'll trade this. We'll put an entry order here, and we'll put a stop loss. We'll trade this, and we'll trade this short. Yeah. This is the only time that we would declare at that point there for it to be a downtrend automatically.
And you would go straight in.
That's it, yeah, exactly. So that's the first variation of strategy that we can trade.
Just to confirm you're watching.
Yes, you know,
Okay, so strategy. Okay. Okay, so that's a little bit more theory about trends. Now, if we had so if we had opposite now, okay, if we had a downward trend, lower high, lower high. Okay, so at this point this is a downward trend, right? So if we had maybe something like this that happened, it goes like this, what type of trend would this be if it's broken? Yeah, yeah, uptrend. Because again it's broken this lower high, right? At the second, on the very bar it does that. Even if it doesn't close above this bar or whatever, wherever it closes, it can close down, it just spikes like this. But this we would still call this an uptrend.
So regardless of any previous support and resistance level.
Correct.
I have a question. So if it went down again and broke that lower low, would that
Yes.
downtrend continue, or
No.
is that a new
Right.
downtrend?
So basically, if it came down straight away like this,
Yeah.
and it did something like this, then again, like this would be a downtrend again.
Okay, that continue.
Yeah, this would be a higher high. Right? And that then would be a downward trend.
Okay.
So the reason for that is because if we have a trend that's already established, like here we had a downtrend, then if the market turns around and it breaks, we call this, if it does something like this, we call it a price structural failure. It's like basically the best analogy I can think of is if you have a building and you remove like one really important brick from that building, then the whole building will start to like fall down. So that's the equivalent of what's happening here in the market. So even if it just spikes like this, and then it comes back and just carries on downtrending again, we'll still look at this as an uptrend, right? We'll still look at that as an uptrend. Just because it's broken that very important level. So we expect that at some stage it will, even if it comes back down again, we expect at some stage it will carry on going back up. Yeah. Okay.
You know the Wolf on Wall Street.
Uh-huh.
Are you going to see him at the end of the month?
Say that again.
Are you going to see him at the end of the month?
Oh, no, I don't think so.
Is that the X-House?
It is, yeah, I heard about that.
What's that?
The real Wolf on Wall Street?
Oh, okay. Is he coming in to do a workshop or seminar?
Well, yeah. See.
We can be outside of the building.
Did you all see the movie?
Yeah.
No, I haven't.
Oh, you haven't?
I haven't.
Well, you should watch him on YouTube, actually.
It's 3 hours.
The real
It's
guy.
too long.
Yeah, you
On
call
YouTube.
So basically you're promoting now illegal download.
No, at home.
It's incredible that listen to the real person speak on YouTube. It's incredible.
Oh, yeah.
He was the salesperson.
No, it was an eye-opener. It was really an eye-opener.
Okay. Has everyone joined the Dropbox folder? Or not yet?
Yes, but apparently not our folders are empty. My folder is empty.
The folder is empty. Okay, that's strange. What about yourself, Ming?
I tried to log in, was it yesterday or the day before?
Uh-huh.
But they didn't kick me out, but I've now managed to install. So I should be able to go and retrieve some stuff.
Okay, cool.
So are there any special what we need to do?
If you go on the Dropbox folder, I'll show you actually right now.
Is that in the Dropbox?
Yes, this is, yeah.
I always have technical issues.
Yeah, we're the same. I think we're all too busy.
Okay, so this is the LTM group program. If you guys pull it up, then I'll walk you through it at the same time as well.
What did you press to go into that?
Oh, this bit. This is my Dropbox folder.
Oh, this is your Dropbox.
Yeah.
Okay.
And then there's a folder. The folder that we share is called LTM group program.
Okay, so then LTR.
That's right. Yeah.
That's your
Yeah.
And then started.
Okay, yeah, so there's a couple of folders, so I'll show you in just a second. I'll just quickly give you a very quick tour. As soon as Mooney's ready. Then what up, Eric?
Yeah, because it's kicked me out of the Wi-Fi.
Oh, you shouldn't need the Wi-Fi, it should already be downloaded to your computer. Did you already set it up before?
lady.
Where is it?
Mm,
Yeah, Dropbox.
yeah.
Click on it. No, this is installing it again.
So application. Is this for Mac? Is it?
It's for everything, yeah, Dropbox, yeah.
Imagine.
So if you click on any of the do you click before?
It's just an app.
Well, if you click on these apps, do they open, or is it just this one that doesn't open?
Yeah. This is iTunes. I need to reinstall.
Excellent.
You see
Do you
this?
wanna
I have it. If I click here, for example, I have it then, and then I just have to log in.
I did log in, so maybe I'm logged in somewhere.
I think mine hasn't.
I know, yeah, so it's installed on my computer, it says.
It is.
Installed, yeah, it's complete.
Okay, so you just need to find the.
So put files in your Dropbox folder.
Yeah, you should have already been invited. Actually, click on
Yes,
sharing.
Yeah, which one?
Sharing on this side here.
Oh, there.
Yeah. And see one new shared folder and just click on that. Yeah. And just click verify. You have to verify your email address first. There you go. And send you an email.
This is that.
Mine is downloading the files now.
It is downloading
Okay.
files. Okay, fine.
Yeah,
Okay.
it will take a while.
It shouldn't be long at all. Okay, in the meantime, I'll just give you
Yeah, it's done. So, yeah, getting started.
yeah, if you click on sharing
No, it's.
For sharing.
Yeah. and shared folder invitation,
This one.
there you go, accept. There you go, it's going to start downloading the files now to your Dropbox. Yeah. Okay, cool. We'll leave it to go in the meantime, but you'll have it on your desktop. So it shouldn't take more than a few minutes. But I'll just give you a quick tour of what it looks like anyway. So inside the Dropbox, there are a couple of folders. The main one is the LTR, right? And this basically contains our journals, which we're trading on and updating every single day. So this basically has 2014 trade journal. So this has all of the trades that we're currently on at the moment. Okay, and this is what we update every day when we're doing the live trading room. We update this journal, and it will be automatically updated in your Dropbox folder. If I make any changes to it now and click save, all the computers that are attached to my Dropbox will update automatically. Yeah? Okay, so that's there inside LTM journals for every day. Then there's another folder here called strategies. And then we have the different strategies, dynamic breakout, then there's a crib sheet. And inside there, so the crib sheet basically tells you different rules for the actual dynamic breakout. So if you look at it, if you open it up there, it will tell you what the rules are. So it says, okay, price action must be making higher highs or higher lows. wait for the price for it to swing higher or swing low, place an if done order, which I'm going to walk you through now. So this basically, it's like lift off, saying it's like the lift off strategy, saying you need 20 moving average to be above your 15, your 100. Then you need to wait for a setup bar. Then you need to wait for a confirmation bar. It's just the equivalent, right? So that's dynamic breakout. I'll show you different ways that it could be traded. So two types of breakouts that we can trade, right? And this is what we were talking about just a moment ago. So the two types of breakouts that we can trade, we call the first one like trend defining breakout. And the trend defining breakout is what we were just talking about, which is when there's already an established upward trend, and you've got your higher highs, and you've got your higher lows, and price turns, and it breaks, and it creates a new trend. So this break here defines a downtrend, yeah, new trend. So we call this a trend defining breakout, if this happens, yeah. If, however, the price is an uptrend, if the market's already trending upwards, setting some higher highs and some higher lows. If the market is already doing that, then we get a breakout up here, and we enter this market long, we get a breakout this way. We call this a trend established breakout. Trend's already established here, and it's just breaking out in the direction of the already established trend. Does that make sense? Yeah? So trend established breakout. So there are two types of breakouts that the whole dynamic breakout works around. Either it's going to continue in the direction of the trend and we'll trade that breakout, or it's going to go against the trend and we'll trade that breakout. Trend established and trend defining. Two types. Yes, correct, that's right, absolutely. So you studied it a little bit already. So now there are a couple of variations inside this crib sheet for what these breakouts all look like. So the first one is what I was just talking about, which is this price structural failure. And that's basically here, where you have higher highs times 2, higher low. And this is already defined as an upward trend. And this breaks, it breaks the higher low, which is this thing here. And it does it immediately, boom, it just breaks it. That's what we call the variation 1 breakout, right? Variation 1 dynamic breakout. We will trade that short on the low of this swing high plus high. So have a look at it on a chart, make a lot more sense.
This is TradeSnitch.
No, this is MetaTrader. Okay. Okay, so here, if you look at this, you've got some 2 high lows, higher highs. It's an uptrend, right? It's pretty clear. Yeah. So what we would do is we would place if we were trading this thing here, this trend defining breakout, then where would we put our entry order to go short based on this chart if we were trading this trend defining breakout? Does that make sense?
Yeah, below the second level.
Why did you ignore the others in between?
This is the most recent. Yeah, this is the most recent. This point is this one here.
That one.
Yeah.
Oh.
Does that make sense?
But there's only one high low here. How can you?
Yeah, it's a good point. So we need to have a reference to what's happened previously. There you go. Yeah. So it's higher low. Yeah.
That's
Yeah, but according to what you could see, you're right. It was only just one.
Oh, so if you drew a line across, you could then
Yeah.
clearly define.
So this is an uptrend. It's established, right? If we were trading that first very entry on the low here, because if it breaks that, then we want to be involved in the market. Short, it's a price structural failure, and we'll trade short. Yeah. Because it's breaks, swing low, enter short.
And each candlestick is a day.
Yeah, that's right. I mean, it's really irrelevant. I'll show you. So here, this is a daily chart. This is a 4-hour chart. See, again, you've got the same cycles happening. Yeah, and you can just identify where your swing highs and swing lows are. So leave that there. You can identify where your swing highs and swing lows are according to that, and then you can just trade breaks of those variations. Even if I show you like even if I show you an hourly chart, it's the same.
Yeah.
Just wait for this thing to.
Can we trade the dynamic breakout in a 4-hour chart?
Yeah.
4 hour.
Yeah.
The same strategy. Same.
Yeah, you can. So with trading it on different time frames, things like that, I always recommend having tested results.
Yeah.
So you know what it looks like and how it performs historically, so you can make sure it works. So what we do is enter this short. It's real simple. All we do is we put an entry point on the low of this bar here. So if the market breaks this yellow line, we'll enter short, and our stop loss will go above the high of that bar just there. Yeah. So totally different to the lift-off strategy which we learned last week, 2 weekends ago. Just different entry parameters. Yeah. Does that make sense, Christina?
I'm a bit confused because I'm trying to remember that our loss should be no more than 1%, right?
Yeah, I mean that stuff comes afterwards. So what we'll do is we'll have, this is our stop loss, this is our entry. We'll work out how many pips of risk there are here. You remember that?
Yeah.
So if it's like 40 pips of risk in that distance, and we have £10,000, then it's going to be £100 for maximum account risk divided by 40. Will be how many pounds per pip.
Okay, so
that's all universal.
comes after. Okay.
Yeah, that's all universal. The first thing is just understanding where the entry and the stop loss goes. Yeah. So in this case, the yellow line would be our entry, the red line would be our stop loss. If we're trading a trend-defining breakout, this variation one. Yeah. So what happens is, let's have a look. Okay, so for some reason. Right. So here, let's zoom in. One of those days when nothing's happening. Right. So there's our entry point. So what happens? Okay, so we're here, we're entered into, yeah, and our stop loss is this red line, yeah. So we're entered into the market, and as of this day just here, I think you can't see Susan, but as of this day just here, it's just sitting at break even. It's just hovering over the entry level. Yeah, does that make sense?
That's the last
the one.
trade.
Yeah. And let's pretend.
Oh.
It's I've gone back to November 2013 to show you an example of a trend defining breakout. Yeah, but let's pretend that's right now, today. Yeah. So there it's sitting at around about break even because the current price is on the entry. Yeah.
But that doesn't mean that we sold at that point. We enter the market when it
That's
goes
right,
to
yeah.
that point.
Enter the market means in this case we have sold.
Gone in short.
Short. Yeah. Yeah. We're betting on direction. Remember, we're betting that it's going to fall.
Okay.
Make sense? Not really.
So because when you enter the market, I understand that's I buy. I
You buy.
trade.
Okay, cool. I understand what you're saying. So there's two ways that we can make money when we trade, right? One is on the way up, and the other one is on the way down. But remember, the key thing to remember is we're just betting on the direction. We make money in the market by getting the direction right. So we may bet that the market's going to climb, and we may bet that the market is going to fall. So here we're entering the market by going short.
So we're
Or
saying that it
So
will
you
decrease.
sell. Yeah.
We're saying it's going to decrease. We're betting that it's going to decrease. Exactly. Right? So on this yellow line, I'm betting that if it touches this, it will decrease. That's the thing. Yeah? And if it comes back up, if I get in and it comes back up to the red line, I'll be out for a loss. Make sense?
Okay, yes.
So here, we're in the market and we are short. And we're already entered. So, well, there. And it's going down here a little bit. Okay, well. Okay, it's going down a little bit more. Okay, so as of here, are we in a profit or a loss in this trade at the moment?
Profit.
A profit, right? But we're still in the trade. It hasn't hit its target. It hasn't hit our stop loss. Okay, so we're still in the trade.
So where is our target?
Good question. So the target we can work out by working out what this distance is here, and then doubling it and putting it below the entry. So
Did you have a website that you go to put in the...
yeah, there is to place our orders.
I can't remember the name of it.
Okay, no problem. It's called Earn Forex Position Size Calculator.
Oh, yeah, I'm sorry.
So let's say here we're in the trade, and do you guys remember how to trail the stop loss with lift-off strategy?
Mm-hmm.
Do you remember?
So on the
Yeah,
this
move it,
interface.
lock in your profit.
Yeah. Say that again.
Yeah, so in this interface, how we choose it and
That's
put
it. That's what I'm
numbers.
going to show you right now. So you remember with the lift-off, behind the moving average, you're going to trail your stop loss. Do you remember that? So we look at where the 20 moving average is, and then we trail our stop loss behind the 20 moving average. Yeah? So that's what we do for lift-off. So with dynamic breakout, is if we're going short and we're selling, we're betting on the market full, then we're going to wait for 3 seller bars. When we have 3 seller bars, then we're going to the high of the lowest seller bar.
What? Which bar?
I'll show you right now. So let's take this out for a second. So basically, we're entered into the market here. So this is our first seller bar. Okay. Sorry, we're entered into the market on this green bar just here. Okay. So if I go back a little bit, actually, it will be easier. So we're looking for 3 seller bars to trail our stop loss, right? So we're entered into the market on this first green bar. Can we trail our stop loss yet? Not yet.
No.
Right? Okay. Now.
How do you spell that?
Salad.
Seller.
The red.
S-E-L-L-E-R.
Oh, seller. Yeah.
Yeah.
As
You're
in
saying
buyer. Seller.
yeah.
Oh,
Maybe saying with an accent.
Oh, no, I just,
Were you thinking wine seller?
no, it's
Celery. No.
salad.
Oh,
It's
okay.
not 2. You count from the first.
Yeah, that's right. This is the first, no, but this is the first seller bar though.
Yeah, after we
First
went
red
out.
bar.
Yeah, after
Okay.
Yeah.
we entered.
So then, can we trail our stop loss yet?
Yes.
Not yet. Okay, next one. There we go. What about now? Can we trail our stop loss?
No.
What do you think, Christina?
Explain. Yeah.
Yeah.
Why no?
Because we're looking for 3 seller bar.
Do you understand what a seller bar is?
So when
Yes.
yeah, when
So
it's
it's
going down,
red.
yeah. So we're looking for those red bars going down.
So 3 red bars. we're looking for.
Because remember, we're on a downtrend. So the
So we
downtrend,
need higher. No, lower lows and lower highs.
No, because you're already in the trade.
yeah, but because we're going downtrend, so the usual trend for downtrend should be the red bars.
Yes.
So that's what we're looking for.
So, okay, so that's the first red bar, so we need 2 more.
Perfect. Yeah.
Okay.
Okay, so. Okay, what about now? Can we trail our stop loss?
No.
Why?
Because it's second.
You're
Okay,
negative.
perfect. Say that again.
You're maybe in the negative.
Why is that?
It's gone back up.
No, our entry
That's
is on
green.
the. No, it's red bar. Our
Oh,
entry
sorry,
is
I
on
can't
the.
see that.
Oh, you can't. All right. Okay,
I
sorry.
can see
That's
green
fine.
one.
Okay.
One red bar.
Oh, yes, sorry.
Okay.
Ignore me.
Okay.
I'd like to see that.
Next bit. Okay. What about now?
Yes, we can now.
Okay. So we can now, and what we're going to do is we are going to trail our stop loss. This red line is going to represent our stop loss. We're going to trail our stop loss from where it was above the high of this bar. We're going to trail our stop loss
To the high
to
of the third.
the high of this third bar just here. This is the lowest one now. We trail our stop loss to just there.
So we'll have profit anyway.
Yeah, we've logged in.
Okay.
Nice.
So even if it goes against, if it turns around now and it doesn't touch our target and it goes against us, then we'll still lock in a little bit of profit at least.
Okay.
Some now you won't always get to lock in a profit. Okay. Sometimes what you'll do is you'll make your loss smaller. So instead